Wow, nearly 1 trillion evaporated from the crypto market on Wednesday's collapse.
Yep, the overall stock market got dragged down as well.
All thanks to China. Well, and people need to realize profits too, I guess.
Yellen has been teasing the market lately, testing what she says will make the big baby cry.
I think she's just saying stuff now to prepare the real monetary policy and hope the reaction would be priced in somewhat by then.
Exactly, so we will cover the crypto collapse and the important information from FOMO meeting today.
And as always, like and subscribe so you don't miss this next week.
Rinse and repeat again this week. All major indexes drop about 3% along with Bitcoin's sudden collapse during the week.
And not surprisingly, the overall market recovered toward the end of the week.
The S&P 500 bounced off from the prior low at 4,056 and went straight to test the upper resistance at 4,180. We might continue seeing more pricing movement in the zone until a solid breakup or breakdown.
Same story with Nasdaq. A strong rebound off the prior low at 13,000 and break resistance at 13,400. Toward the close on Friday, it slipped and went back to test the breakout level. We should be able to run higher if this level holds into next week.
From the technical perspective, both the Nasdaq and the S&P are playing out the near-term W bottom formations. We should have a better idea of where this leading us into next week.
And not so much from the small cap. Along with the small setback with other indices this week, it didn't even come close to test the critical support below around 2100.
Also, we would like to remind you that we are still in an accelerated rotation market. Every week, we could be playing a different game.
Exactly. Make sure you don't sleep on the market and keep up with the Fed's decision.
Let's briefly discuss what has been headlining the economy lately. The Fed released the formal meeting minutes from April.
And to nobody's surprise, the monetary policy will remain the same. Rates will remain close to zero, and monthly bond purchases will continue to be 120 billion.
However, the minutes shows that some board members believe if the economy continues to progress rapidly, it might be appropriate to start talking about lowering assets purchases.
So, what are your thoughts on that?
I think that is all talk for now, as Powell mentions, even though the economy unemployment rate is decreasing, but also, like we mentioned before, the unemployment is still very uneven. So as long as the Fed keeps seeing this, which means the economic recovery is still far from the goal, the Fed will be less likely to change its policy near term.
I think so too. Easy money policy means low rates, which means companies have more money to hire more people and then faster economic recovery. But if the inflation continues to increase too quickly, and if it sustains well over 2% target for a while, the Fed would have no choice but to change course to prevent inflation from going out of hand.
That's true. Usually unemployment rate and inflation has an inverse relationship. When unemployment rate is up, meaning the economy is bad, usually prices of goods and wages will be down. However, when unemployment rate is down, meaning the economy is good, that means demand is up and prices of goods will be up.
Oh, okay. I see where you're going with this. At this time, the Fed is facing a tough situation where the unemployment is up and the inflation is up too.
Right. So, as I was saying, as the economy recovers, companies need people to work, but people are either lazy because they have the unemployment benefits or because the fear of COVID. So, if Feds maintain QE, it will keep driving up the inflations. But will that help with unemployment?
Not likely, as the inflation rate blows past the wages increase. For those who are mid to low income, will QE improve unemployment or improve desire to go back to work? Not necessarily.
So, if economic recovery can deliver increased disposable income, that's not a meaningful recovery.
Exactly. And seems like the Fed is not lowering unemployment or controlling inflation, which are the two imminent responsibilities.
It is not an easy task. Supply chain is a global concept, but currently, and might I say, the core issue is that the pandemic is still recovering at an uneven pace globally. So supply chains is very messy. Sometimes it is good, some other time are disconnected. So the unstable situation will push the raw material price up, then the PPI.
And then the PPI will push the CPI up since people need to spend more for the same amount of products. So the personal consumption expenditure, PCE, would also be dragged up. That's your inflation right there.
Completely agree. So is this inflation really temporary? The Fed can see the recovery data domestically, but can they accurately predict the global pandemic recovery pace? Can they predict the global supply chain recover and stabilize?
That's a good point. It seems like as long as the pandemic is not under control, what you said are all tough to predict.
So that's why the Fed is kind of in no man's land right now. As soon as they start talking about reducing QE, people will think that's relatively normal. So if they maintain their stance, people will likely think that you are trying hard to carry a sinking ship.
So this is now becoming a risk. Before, the Fed kept saying that inflation is transitory. Oh, we're not in a rush to discuss or reduce QE, let alone raising rates. But with the data right now and the meeting minutes, what if the Fed changes direction all of a sudden?
Yup, so if they start discussing reducing QE in June, since the market already priced the future ahead of time, so this will definitely impact the risk assets, which are your stocks in near term.
Bitcoin falls as much as 30% on Wednesday. So do you think this is a bust or a buy?
Well, Bitcoin drops below $30,000, leading to more than $8 billion in position liquidations due to margin calls.
But it quickly rebounded after Elon Musk and Cathie Wood indicated their support for Bitcoin.
I wonder how many people regret selling their crypto position before Bitcoin snapped back to $40,000.
Regret selling? At one point, nearly 1 trillion was wiped off the market cap of the entire crypto sector. I think the more appropriate question is how many people blew their account.
This sharp drop should come as no surprise to the market. I mean, everything is flying in the crypto space.
Yup, on May 17th, there was a coin called Fuck Elon, which went up 6,000% within a couple of hours.
That's not the only one. I mean, we can go all day with the list.
Yeah, I mean, nothing goes up forever, right? And Bitcoin had already been under a lot of pressure this month since Elon Musk's reversal on Tesla accepting Bitcoin as payment, citing environmental concerns.
Aside from that, China, which is developing its own digital currency run by the government, emphasized its ban on cryptocurrencies on Tuesday and further banned all financial companies from involving services related to cryptocurrencies.
And the newly appointed SEC chair, Gary, recommends Congress the crypto market needs more investor protection and regulations. Regulatory uncertainty often precedes volatility.
It is easy to forget that cryptocurrency market cap was at $1.8 trillion and still largely unregulated across the globe. This means that at any time a government makes a decision on cryptocurrencies, we are likely to see a direct effect on the market.
Wow, with that market cap and not regulated. But also, the world's largest crypto exchange, Binance, is under investigation by the IRS and the of Justice for money laundering.
They are in a lot of heat lately.
While many strategists see this pullback in Bitcoin and other crypto assets as a healthy sign after massive rallies.
Compared to most investments, Bitcoin is a highly volatile and highly risky investment.
So, again, is this pullback a buy for you?
Well, Elon Musk is diamond hands, and Kathy Wood said that she's still sticking to her $500,000 forecast for Bitcoin.
Hmm, I would rather put my money in rare metals because my heart can't handle this type of volatility. But I do have very small amount of cash in Bitcoin when it crashed last week.
Well, my first pick of the week is EPD. This is a North America midstream energy company providing a range of services to producers and consumers of natural gas liquids, crude oil, and certain petrochemicals. The stock price recently broke out and is now retesting the breakout trend line. Stock prices around 23.5 is an entry level for me.
My first pick is Chipotle. I see 1300 as a nice support as it tested 3 times. I'm trying a small position near 1300.
WYNN is a pending for a breakout. I like to set my buy above the trend line. This should take us somewhere as the travel restrictions slowly getting lifted.
Yeah, I can't wait to go back to Vegas. Anyway, my next pick is DraftKings. This would be my long term hold. It is the only vertically integrated gambling company. That means they have their own gambling ecosystem and they develop their own software, so they don't have to rely on others. It is still ways away from being profitable. So, fair warning, we have to be patient with this one. I'm waiting for $30 to $31 support.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.